It's double from the March low, and it's only 10% away from its record high about a decade ago. I think there's more to go, and dips are a buying opportunity.
And gasoline's been leading for the last quarter. I mean, you look, it's up over 50%. It's really a reopening play. Number of vaccinations continues to increase. Number of people start to get mobile. You start to see people talk about airlines, cruise ships, leisure stocks, travel everywhere. So gasoline demand is definitely on the up and up. And what you can look at is that crack spread. It's at a 9-month high.
For the better part of the last month, and this is what we've been talking about in our Daily Grain Express, is the fact that we've been mostly range bound. Call it 13.35 on the downside and 13.93 on the upside.
Thanks a lot for having me on. I've been mapping this out with you going back to October when the 10-year was at 60 basis points and the futures were trading just under 139. This is our target, 134.5. So I'm excited to see it down here. Inflation tailwinds are already there. We've already seen it. We're seeing the fiscal spending coming on board. So really from here, I'm out. And ultimately, we've seen volatility double in the last 2 weeks in these. So the trade I like doing is I'm actually selling 30-year bond put spreads, looking for this thing to consolidate back up now. I'm looking at the 158.5, 157 put spread, selling that, working an order, sell for $700 or 45 ticks. My risk is $800 to collect 700. So consolidate back up. I think the worst is here as this March contract rolls off.
Well, I said we may get to 150 by the end of the day. We might get to 150 by the end of the show, the way we're going now, because we're moving in that direction. We're up nearly 8% on yields today. Bill, thank you.